Greetings. This is the founder and CEO of Your Wealth Group, Katlego Mamabolo, and thank you for once again for you guys coming and joining into one of our sessions. We'll be looking at aspects from markets to all things that are related to building consistency and profitability when it comes to trading. I always tell my clients that when it comes to trading, guys, your strategy, your skill only counts 10 to 20%. And with that being said, guys, that's all it contributes to your success. Or when we speak about consistent profitability when it comes to trading, strategy and skill is only 10 to 20%. And what constitutes the most is psychology. That's one thing I'm just getting into it, and I want us to go deep into this aspect. I'll be uncovering keys and secrets whereby you'll be growing from them, as well as learning how we view the markets when it comes to our strategy. That I'll be showing you. One, it is about following the markets. When we speak about psychology counting 80 to 90%, it doesn't mean that strategy counts least. That's one thing. It is still important for you to learn how to analyze. It is still important for you to have a skill of trading and sharpening that skill. But just know you're only sharpening the 20%. And even though you have that, but the lack of psychology, the lack of the proper mindset of a trader, you will find yourself in positions where you remain inconsistent. We speak about the figures of trading where we have figures ranging over 85% of people who are not profitable when it comes to trading. And we ask ourselves why. This situation whereby now people start asking themselves why is because of other aspects. Obviously, there are people who've watched every video, every session, every live, every single thing, building on strategies and strategies, yet they remain inconsistent. And we ask yourself, means the skill is not just the only thing that's required. What else is missing in order to build that consistency? And we find that most flaws that people have, they tend to be on the psychological side. So with that being said, we're going to be diving into matters. We're going to be looking into those things. We're going to be unlocking. We're going to go deeper and deeper. As you can see already, we're running in profits. This is one of the signals we sent out in our signal group. And so far, God has been with us and it's been doing very well. So I'm going to be addressing also the points that I've already addressed, but I want us to look into some analysis, look into some charts, and as well as go through our strategy. Right now, we are on the German 40. This is just another German 40 chart. I'm going to clear it out. Just 1 second. Just want to exit this full screen so I can see other tools. Just removing them. We're going to be following the structure, guys. We're going to be showing you how we analyze. So as we go into matters, just bear with me as we speak, as we share this follow the market simple strategy, guys. Just bear with us. We'll also be addressing keys and sharing some secrets that will help you and unlock the trader within you that is profitable yet also consistent. So guys, this is a chart of the German 40. I want to get straight to the point to limit time and manage time. So this is the chart of German 40. As we look at this chart of German 40, we understand one thing. When it comes to trading, we need to determine the direction of the market and then also take trades in the particular direction that the market tells us or gives us, or we should be actually going into. So one thing about analyzing, we understand the basics of trading. We speak about top-down analysis. We do not just analyze one time frame and then we just take a trade based on that time frame. We need to be mindful of the overall view of whatever that we are trading. If we're trading NASDAQ, German 40, gold, currencies, doesn't matter. You need to have an understanding of all time frames and so you can make an overall good decision as to how long, how good you can get, you can go with regards to a trade. You get it. So one thing that we do when it comes to analysis is we break it down from bigger time frame to smaller time frame. As we say, top-down analysis, that's what it means. We analyze the bigger time frames. We always know that the bigger time frames are for the trend direction. and the smaller time frames are for confirmation and entry. I hope I do not lose anyone throughout the session. If you have any questions, please send them in the comment section. Make sure to engage with us. Let us know how the session was for you. Please, by the end of the session, if it was good, leave chats, leave comments, leave views, and then let's talk and engage. So yes, let's go back to this. So as I said, big time frames are for trend direction, small time frames are for confirmation and entries. I always say this, guys, it is not enough for you to know where the markets are going. It is also quite important to know when to enter the markets. Some of you are good at determining direction, but suck when it comes to the timing, when it is time to enter. As you can see, markets are going up and down. As much as it is going upwards in an upward trend direction, we can see from here and here direction. But in the journey of it going up, there have been pullbacks, there have been tests, and there's been markets going down. You get it? So it is not just enough to know the direction, but also critical for you to know when to enter the markets. That's some of you's problem. But we're going to deal with some of these aspects and make sure that everything is done accordingly. All right. When we analyze the chart, one thing you must always have in mind that we are looking to understand what is the charts telling us more than it is about what we think or what we hope the markets are going to do. The issue with people, they speculate on the aspects of what ideal situation they want out of the market, rather than actually taking or listening or reading what the markets are telling you and then doing in accordance to what they tell you. It is important not to try and dictate. This is situations whereby people now, when they trade, they say this thing is overbought, but yet you see it is still in an upward direction. It hasn't confirmed that it is going to change direction, yet you are trying to sell in a market that's going up or trying to buy a market that is going down. So we do not dictate the market conditions. Our 2000s, our 5000s do not shake the market. They do not make the markets alone. So it is not for us to trade or to predict or to set the markets, but it is for us to move in the direction in which the markets are going. And that is one key component that people need to realize when they trade. So we are going in the direction where the markets tell us. If they're saying we are in a downward direction, then it means we should be looking for opportunities to sell. Why do we say so? You can see in an upward trend where the markets are going up, even though there are pullbacks along the way in an upward trend, even though there are pullbacks, but the fact that the market direction is bullish or is in an upward direction, the big moves will always be to the upside. You can see from this slow, the markets went up, there's a bearish candle. They reached the resistance point, pullback. This pullback, you could have sold it, but the big move that you needed was the buy. Look, after the pullback, the markets bought strongly. Even right here, when they pull back, the market still bought so strongly. The good moves are in the direction of the markets. That's where you see our results, whereby we take trades that are not too quick moves, but they are of good value because we are going in the direction in which the markets are telling us. If the markets are saying we are going down, we look for opportunities and confirmations and entry points in the direction of it going down. And that's one aspect that people tend to sleep on. That's the thing. We try to tell the markets what to do, but that is not the point. The point is for us to actually follow the direction of what the markets tell us. I hope I'm going to try and keep it as simple as possible. So I want to dive into this thing. One thing that I'm going to be showing you while we unlock some of the few secrets that we have. There's so much in our arsenal, but now we just want to give you the basic of following the markets. Just the basic of following the markets. Apply it to whatever strategy you have, and I can tell you, this will add so much change and so much value in your basic trading life, in every single thing that you do when it comes to trading. I always say the charts are a representation of who you are. They show your character. That's where we also going into psychology. They show your character and we see the type of person you are. As I say, this is very mental. This is very mental. Trading is a very mental situation, and we need to be mindful of that aspect, right? But we're going to be diving into things. Let's go into this. The whole process on how we do it, how we follow the markets. We look for the trend direction by just viewing this part. As I say, it looks like it is an upward direction. But we're going to be determining that. We can see from down here, we've been going up. As you look from here, going to the right-hand side, it looks like we've been going up. I'm trying to keep it as simple, even for those that do not know how to trade, to understand this strategy. And I tell you one thing, there's so much power in you being able to apply this. We can see from this low, let's look at the markets from this low going all the way to the right-hand side. So we can see these markets have been pumping up with pullback pullbacks along the side, along the journey that it has been doing. We can see up here, we see a major resistance point, which was broken last week. When is it? Yes. It was broken about yesterday with a bullish buy, and then today we can see markets trading just above it. This was the high that was at play before your resistance point. Yet today we can be close. If it is to close as a bearish candle, we consider it as confirming a resistance at that part, of which it looks like definitely it will do so. But let's pay attention to the journey right here. One thing that we do, as we said, we're going to paint a picture, and then once we have the picture, we're going to apply and look for opportunities within the picture that we have. Right now, as we can see, markets have been bullish. What we're going to be doing is looking for levels where markets have been finding supports. What we do when we follow the markets, if the markets are bullish, we look for levels of support. When the markets are going down, we look for levels of resistance. Pay attention to what I said. In an upward trend, we look for levels of support. In a downward trend, we look for levels of resistance. And I will tell you why. The reason we do so is in an upward trend, when markets are going up, we identify each support it makes. Once the markets break a support, what it means is that the markets could be potentially changing direction to the downside. And another reason as to why those supports are created in an upward trend, even though once broken, those past supports that you've been identifying when the markets are going up, they become take profit targets. They become targets for you in its descent. And then vice versa when it comes to a downward trend. Once the markets change direction, going to a downward trend, we start now looking for resistances. So that when it now breaks the resistances, we know the markets are going higher. So we are just going to follow the markets. I want to show you actually based on history before we go to analyzing the markets. Let's start it a little bit back. Let's zoom out. Let's start it a little bit back real quick. I want to show you the power of following the markets. This is very simple. And if you have any complications, comment section. Let's start from down here. It will be very quick for us to get to the current market price. Let's pay attention from the markets when they got you. As we said, in an upward trend, we look for levels of support. When it went from here, it went up. We can see there's two bearish candles, meaning the markets have turned. The red ones are bearish going down. The green ones are for it going up. It came, created another support level here. Markets went up, came down, supported. Markets went up, came down. Let's just zoom into this area. Let me just zoom in to the area. And then so we can see it clearly. Let's see what happens. How do you see when the markets change direction? Put it right here. When they moved from there, support, it means it's an uptrend, right? After they supported, what happened? The markets went up, came down, supported right here. What happened from there? They went up, came down, supported right here. One thing I want you to take note of, one thing about us, we do not undermine a level. We always say when the markets find a level of resistance or support, it is not just for fun or just to scam people, but there's a reason why price has resisted or supported at that price. Thus, we need to pay attention to that price level, and then we trade in accordance to that, right? So let's watch. From here, the markets went up. There's a bearish candle right over there, and then supported right here. You can see the power. You'll see the power as we move. From here, what has happened? The markets went up, came down. There was a support right here. By this indication, we can see there was a support right here. It went up, came down, spiked down, went up all the way till there. What happened when the markets got to this point? Let's pay attention to this. The question is, what happened? Did the markets break? Yes, at this point, the markets could be looking to go to the downside. And what do we see after the breakout? Now we know after we break out, we know that we are now looking for resistances. There's a downtrend that is at play. And meaning once we break a support, the last support that we have set will become a take profit target, which was this one. Was it hit? Definitely. If it was to break below this, we look toward the next. We break, we look to the next, meaning we trail it to the next level as it goes. And as it goes down, what we are doing, we are identifying resistance levels for just in case when the markets decide to change direction. So pay attention to this. So we had our breakout, markets went up, came down, and it chose to go down first. Thus, we now, instead of looking for resistance for support, we start looking for resistances. What happened? Markets went down. They went up towards there. They came down right here. They went up towards there. Let's mark that resistance. Sorry about this. Let me just move this tool closer so I can click it quicker. Went up, went down towards here, went up to the resisted, went down towards here, went up towards the resisted, went down towards here, went up all the way till there's the respected resistance. Came down, created a support here, right? So this resistance right here has been holding. They never actually changed direction. We can see the resistances that we have set. They have never been broken. Came down, went up, created a tail just above, but never closed above or breaking them. A tail doesn't mean it broke. It just means that's how high it went. In the bottom side of the tail is how low it went. But it's all about opening and close. The market still respected creating this as our last resistance, right? From here, the market's okay. Once we have our last resistance, let's consider this part as not yet existing. We still respected this, we still respect this, and then the markets from there, they went down towards here. When they came up, they came and resisted around here. So when we follow the last resistance point, from here, what happened? Markets went down, went up again, resisted there. Let's mark it right there. You can see there's a bearish candle, then a bullish candle, resisted here. Still respected this last resistance here, creating a new resistance, which is this part right here. And then it went down. Came up again, created a new resistance right there. There were no higher resistances than that one. Then we created this one. Markets went straight to TP. It means when it broke out and you sold around this areas, we're looking for the markets to go down to the first target, which was hit. If it was to break this, we would be looking for lower low. But what happens? The markets came all the way, hit our first target, and then what happened from there? The markets bought. Now we watch. So we know that the markets here, they've been in an uptrend, got to this part, started going in a downtrend, and we can see our resistances at the top. They're going to be used as an indication for when the markets change direction. In this case, we targeted. While we're selling, we're looking at the targets, we hit it. What happened? The markets pulled back towards this resistance, thus breaking this resistance, thus breaking that resistance. When resistances are broken, we now know that we're no longer going down. Now we are looking towards an upward trend. What happens now when we look towards an upward trend? Now we know, okay, we've broken. Once we break, we know the past the resistances become take profit targets. After it broke this, it went to that one. It hit this one. It hit them, canceling them out. So when it hit them, they canceled them out. We know now that the markets here, they're in an upward trend. So when they're in an upward trend, what are we looking for? Levels of support. This is the last support the markets created. This targets got hit. We see the breakout of the last resistance point, and we can see basic trading, break retest. You can see the power of these levels. So now, what happened after we broke out? We went up. We know we're looking for an uptrend. We went up to there. We came down to here. In an upward trend, we look for levels of support. We supported here. What happened after this? The markets went up, came down, supported. What happened after this? Remember, this is daily time frame, by the way. This is daily time frame. We're just following the markets. That's all we are doing. From here, the markets went up, resisted there, came down to support right here. This was a support. And then it went up to the breaking support and then going to the last support. Guys, mind you, just from here to here, if you were to trade it, it's good pips. It's a lot of money. You can make an easy 1,000 or so with just this drop, depending on the type of account that you're trading. It seems like it's a small trade, but consider that it is daily time frame. But you target the last support. Once we break, we'll target the last support that was created. And then when we got there, we failed to break below it. Then we found support. Once we break, we look for resistances, meaning here is the resistance. This was the support that it was targeting, which got hit right here. This was the support that it got hit, and then it broke it, went to that support, finding support. You can see the power of target. It went down from here to there. This was a resistance, and then it came down. So what do we wait for? A break to the upside, then we know that it is a change in direction. We know there was a young downtrend. When the markets got here, supported take profit, it got to this point, creating a new support. After creating a new support, what has happened from there? I just want you guys to understand the power of following the markets. The last with regards to the resistances, to know that the markets have changed direction. When they broke to the upside, when the markets pulled back and broke to the upside, we knew now again the markets are starting an uptrend, meaning we start looking for levels of support. Thus marking the support, and after marking the support, what did we see? The markets went all the way up. And then after breaking the upside, we identified a break and retest, basic, came and retested, creating a new support right here. So now that we know, you understand how we got here. These supports are still there because they were never addressed. This one was never addressed after it went up. This was the last support before it went to the upside, got to a resistance, supported, and then we continued to the upside. Let's watch this upward trend right here. We mark it. We're going to be quick. If you go on a lower time frame, you'll see right here, there's definitely a support. There's definitely a support. I know it is not a bearish candle, but you can see there was a gap. There was a gap down. This was a bullish candle that closed, and then this next bullish candle opened lower. So you can see the markets went down, supported around here, and then only after that, they pumped up. There was a support. And then from there, what's our next support? There's a bearish candle support. We're just paying attention on its journey. When up, came down, supported here. When up, came to test it, double bottom right here. When up, came down, supported here. I want to just show you the power of following the markets. Just the power of following the market, supported there. What happened after this? The markets went up, came down, supported here. What happened after this? Went up, came down, supported again, double bottom here. Went all the way up, resisted there, came down, supported here. What has happened from here? When they created the bullish candle to continue, you can see it was a confirmation of a support. The markets failed to continue higher, but chose to break to the downside. Breaking to the downside, what does it mean? A change in direction. A change in direction, what does it mean? We're looking for opportunities to the downside, and then we're also looking for resistances. Ever since it got here, that was the resistance. We see the breakout right there. It went down, supported, went up, resisted here till it crossed. We see another one there. Markets went up, went down, went up, resisted. From here, target, the last support was hit, TP1 was hit. Good pips, good pips. Broke it. From here, it got here supported. We can see a bullish candle came and created a new resistance right there. What happened after this resistance? Markets dropped, attending to 1, 2, 3 targets also on its way to the downside, leaving a tail. And then what happened right there? This one got hit, take profit, got hit, we remove it. Did this one get hit? It got hit, but still markets closed above it. So let's just leave them for now. I'll explain it in a few. So, okay, let's just remove them. Since we're following, this got hit, this one also got hit, and this one got hit. After this one got hit, the markets failed to reach this target. What happened? The markets pulled all the way back towards resistance. But the fact that the resistance still held, only when it's broken, then we know we are going higher. We are looking to the past resistances being take profit. It came back down towards here supporting. Came back up towards this resistance, came back down towards here supporting. So at the bottom, it's been creating, since it got to this point, what did the markets do? They went up towards there, came back and supported here. Went up towards there, came back, supported here. Broke out, we know we're looking to the upside. We're looking for levels of support. Here's a support, here was a support where it came back, and then we broke to the upside. Target 1 got hit, target 2 got hit, target 3 way out. Beautiful. So we know currently when the markets were pumping around there that they were in an uptrend. And what are we going to do? We know since we broke above, those TPs got hit. We are now looking for levels of support. We see the markets went up, came down. When up, came down from here. Where did they go? They got here. See a bearish candle, came to support there before they continued higher. There was a support right here. We're almost actually close to the end of this journey. And you can see those that are still there at the bottom, they are marked. And you will see why we do not remove them and the power thereof. We can see right now when we got here, markets went up, came down, still respected support, tried to go higher, they broke out. A possible downtrend is loading now. A possible downside trend is loading. Looking for resistances now. Resisting. Came down, went up, resisted. Went down, came up, created a new resistance here. Came down, went up, resisted here. Watch this. Came down, went up, failed to break it, still close below, resisted. So resistances were still unattended, right? Then this was the last resistance. What happened? Markets came down, went up, there was a resistance. Actually here, what happened? Yeah, it gapped down, pulled all the way down. I want to show you something right now. Resisted there because you can see there was a bullish candle, meaning the markets went up, then a bearish candle, meaning they went down. What do we see? A break to the upside. A break to the upside. And then now that there's a break to the upside, we were anticipating markets to continue higher to attend to the others. So in this case, markets failed, meaning when it broke to the upside, we started looking for supports. So what has happened from here? The markets did break the resistance, failed to go higher, still just respected a young resistance that was right about this area. It's right about here. You can see here there was a support, there was a resistance right here. Got to this point, broke, just tested it today. What did they choose to do? After they broke out, they chose to sell. Went all the way down to go to the downside, back towards the support. We start looking for resistances again. So we mark our resistances. So what happens from here? The markets went down, went up. This was a choppy market area here. Very, very choppy. Got towards a resistance here. Instead of markets going all the way down, failing to reach this area, so we can see in this choppiness of a market, what has happened. I want to show you something. From here, the market supported, went down towards this price, went all the way up, broke above. Possible uptrend could be loading around here. So what could we do? What we do is we look for supports. We're just following it. And then what did we do after that? We found another support. Markets went up, came down. We see a bullish candle supported right about here. Came down to this low. Yes, went all the way down to here. From here, markets were bullish. And we can see there was a bullish candle. After it supported here, the markets went up. And then when they came down, they still never broke below the support. So we know we are still in an uptrend because support was not broken. So we can see from here what has happened. Went up, came down. And we got here, markets opened lower, still at support, but still went up, they came down. So there was a support right here. The last support that was created here when it went up, came down to test that support again. After it got here to test the support again, right there playing, at play. From here, we went up to go hit the target, that resistance there, but we know came back down, supported there. We know there's still an uptrend, went all the way up there, supported here. So what happened? We knew there's an uptrend, this target got hit, right? We hit it. Sorry about that. Which target? Yeah, this one. The markets hit this target. Got all the way breaking that target, went and hit this one also. You can see right here was a beautiful also sniper entries. You see where the sniper entries happen at key points where markets, we're not undermining any level, and then markets actually tend to respect these levels. They got here, hit that one. What happened? They pulled back, supported here. Instead of continuing higher, what did they choose to do? To break to the downside, targeting past supports, take profit will be that one. We know that now we have a downtrend. So we start looking for resistances. What did the markets do? Went and addressed our first target beautifully. So we can see the accuracy of the strategy, guys. And then after it did that, it addressed that one, we're creating a new resistance. We know that there's a downtrend now ever since they broke out. Then when we got to the resistance, the new resistance, markets came back towards the same support. The support that it created last, that was here. It came back towards there, and then it did what? It went up. When it went up, went all the way up till they pulled back. Instead of it going all the way down, what did it do? It still just created a young uptrend situation, creating from this support area. Markets went up, pulled back to the upside, towards that point, came back down, supported, went back up. But the fact that the last resistance since it came down, this was the resistance when it supported here, it went up. The last resistance we had was this one. The fact that the last resistance was never cleared out, meaning that the markets were still in a downward trend. Whatever that the markets were doing were just retesting or correcting or pulling back. That's why when you follow the direction of here, we see there was a young uptrend, markets creating some levels of support. We know it's in a downtrend at this part, but we're looking for the best possible area for the downtrend. What happened when the markets decided to continue its downtrend? It got to this point, created this resistance. Along this resistance, we can see there were just a few young supports created on the journey, but we still knew that this last resistance was active, meaning as the last resistance was active, the markets were in a downtrend. We can see the markets went up all the way till here, this price. They came down. You can see with this bullish candle, then this bearish candle gapped up and then up to there and then pulled back. So there was the resistance of this uptrend right here, ended there, and then came back down here, supported, went up, still never broke that resistance. So this support we just added to see when the markets are now changing direction, continuing the downtrend, since this resistance was never broken. We were still looking for the big moves to be taking those small supports that it was creating and officially attacking the support that we wanted. That when we saw the breakout up here, then we were targeting this support. We started with targeting this one, it got hit. The next one was this, because the resistance was still active. We still knew we were in a downtrend, and we saw the market sink, breaking and addressing those levels. Broke and addressed this level. Did the markets reach here, break and address that level? What has happened? We got to this level. You can see when you follow it, you get the big moves, which is to the downside. These are levels that were there in the past that were not addressed as yet. They got addressed also. Did this one get addressed? Yes. Did this one get addressed, guys? This is daily time frame. So imagine how much money this was with this drop. All the way when it got to this level, addressed it. Did it get to this level? Hit it? Definitely addressed it. We can see that this downtrend was very strong, clearing out targets. What did it do? Look at the past levels. Look at the power of levels. Look where it went to bounce off at one of our key points, which made a very beautiful sniper entry, right? So this was beautiful. What happened around here now? This is now going into current market areas. We know the resistances at the top are still set ever since it went down. This is before this part came into being. So the markets from here, they went down all the way till there. They went up. If you go on a lower time frame, I don't know, for beginners, they might not be able to see it. But for people like us who've been trading, you'll be able to see this, that the markets actually went down till this point, right? They pulled back. You can see even the markets here, this next bearish candle, gapped all the way up, right here, opened right there, and then creating this candle. So there was a gap up and then a pullback, meaning it got to a point right here where the markets resisted. What happened when the markets resisted here? They pulled back down, creating a support. Instead of it resisting and going all the way down to break the last support and going lower towards other targets, the markets chose to break above. So when they resisted closing bearish, markets went up, creating another resistance there. You get it? Creating another resistance here. Instead of the markets actually continuing their downtrend, what did they choose to do to break to the upside? Meaning that right now we are in an uptrend. Meaning from here, we're looking for supports. This was the support before the markets went to resist there and then pulling back all the way, creating a support. Let's just remove this. I know it's not clear for most people, but right here, if you go on a smaller time frame, you'll see the break to the downside. I will show you when we go to a lower time frame. I hope everything is making sense right now. What happened from here? Markets went up, they came down, supported. When up, came down. We know there's an uptrend that is forming. And where's this uptrend targets? Those resistances that were there at the top. While we go all the way up, we're marking the supports. We went to the upside, we came back down, supported here. We went to the upside, came back down, supported here. The first target was the reversal of the whole entire drop. Did the markets actually deliver on their word within that regard? The markets definitely did it. All right, 1 second. I hope what I'm saying is making sense. So what has happened from this point onwards? Targets are getting hit. Did this one get hit? Definitely. Did this one get hit? Beautifully so. The markets went and addressed those other ones from the past. Did they hit? Beautifully so. Did that one get hit? Beautifully so. And then what happens from here? We can see the uptrend went all the way up, supported here. Went all the way up towards this point. What happened when the markets came here? They came back down, supported here. 1 second. Supported there. I want you guys to pay attention to what is happening also here. From here, the market supported. Instead of them continuing up to break the support, when they broke the support, past supports become targets. This one got hit. Beautifully so. This one got hit. Beautifully so. After they broke here, instead of them continuing the uptrend, we knew there was a young downtrend at play here. And then what do we look for? Levels of resistances in a downtrend. It went all the way up till there, came down towards here. Went all the way up towards there, resisted, came down towards here. Instead of it continuing lower to target other levels, what did it choose to do to break to the upside? Meaning there's an uptrend. We can see even basic like markets were been ranging, going down, when up, played around this area, and then they came to support there from here, broke to the upside, past the resistances become take profit target. Did this one get hit? Beautifully so. And you can see when they break the retest, look at the snipers on these levels. Look when the retests come into play. That target got hit. Did this one get hit? Beautifully so. Done. What happens now? We are in an uptrend. We're looking for levels of support. Markets went up towards, they pulled back down towards here, creating a support. What did they do after this? They pulled to the upside, came down, supported. What did they do from here? Went to the upside, came back down here, supported. What did they do from here? They moved to the upside, came back down, supported here. And then what did they do from here? They went up, pulled back, came and created a support, same around the same areas right there, creating our new support being here. What is happening at current market price? We can see that supports were not being broken, so we're still in an uptrend. So we're still looking for supports on its journey. Currently, with markets, they broke this one, so this TP got hit when it went all the way up, it broke it. So if it closes bearish, which is a high chance considering the time in South Africa right now is 18 minutes past 9 p.m. So basically, high chances that it might close bearish. Maybe fundamentals will be the one that pumps it higher. I just want to check if we hit take profit. We're currently in a signal. Just want to see how good is that signal going. Let me just check it in a second. Just 1 second. The details. Just zooming in. Just want to get to the current market. It's looking good, The signal's doing very well. This is a good amount of pips. This is 1 hour time frame on the German signal that we sent in our signal group. You can see guys targets getting hit. We'll explain it as we go. So we're just looking at the Germans right now to understand how we got to that point. Let's move back to our daily time frame on the German 40 and just to see how we've been doing pertaining to following the markets. We were still here. We see the supports. Markets went up, came down, supported. The now closing bearish, we mark that as a resistance. The last support being this one. According to daily time frame, what daily is telling us is, okay, as I say, each time frame paints a story. Each time frame tells us its view as to what is happening, what is going to happen, what it says, and then we need to identify the story of each time frame. Currently, we have daily. We are looking at it just by following the markets. Daily says ever since we got here, we've been in an uptrend. It could be just pulling back to retest, continue its uptrend. As you've seen along the journey, we've been having candles that are bearish and then the next one closing bullish. Very possible. Very possible. In this case, the question lies, what is happening? So from here, yeah. From here, the markets went all the way up, resisted, and then it came down, supported. Went up to resist up there, and then could be going down to support. The only time you say, according to daily, the only time we'll say that the markets are going down is if we were to break the last support, meaning we are targeting the others. Now, I want to show you the importance of this is daily time frame, meaning each candle took 1 day to form. The reason we look for different time situations in different time frames, understanding the story of each time frame is if the markets are really selling and they are going to go to break this level right here before daily actually tells us, we'll be able to see the change in direction earlier before it even reaches this part where daily is about to tell us. That's why we go through multiple time frames. You might be in a sell just like us. Maybe it can come back all the way down here, supported. You would have seen it earlier by going through multiple time frames. From bigger time frames, top-down analysis to smaller time frames. But for now, let's stick to the story of what is daily telling us. So daily story is, okay, guys, currently we are in an uptrend. And even though we are in an uptrend, we can see today that markets have been bearish. There's a resistance that we have there's a resistance that we've hit. And then currently the markets are in a downtrend. And with markets being in a downtrend, currently markets are in an uptrend, with today being a bearish pullback. So the question is, this is a pullback where it's going to take us down? We'll know another time frame. But what daily is just telling us is we are currently in an uptrend, with today being a bit of a bearish day where markets are pulling back. That's the story according to daily. That currently the overview is up according to daily. So now daily is telling us that we are in an uptrend. Some people might be mindful. I don't want to go into, I just want to keep to the basics of following the markets. You've seen the power. You've seen that most of the time our first targets get hit. I know there are people who are looking at this level right here. Oh, sorry. What am I doing? Just 1 second. Just want to drag it right here. Where the market's created a resistance, if it closes above, you might see it as a break and retest, But we'll see. The story becomes clearer as we go through time frames. But for now, our story is we are currently, according to daily, in an uptrend. This could be just a pullback to retest that price level right there, or it could even be an opportunity for the markets to sink lower. We don't want to overcomplicate it. I don't want to be adding trend lines. For now, it's not about trend lines. It's about following the markets and following structure, the basics. And this is powerful. As you guys can see, when we go through this whole thing, you see targets often get hit. It's not often when one of our targets doesn't get hit. And you can see the levels, how they are being respected when markets reach their targets, where they turn and how they go about things. Because all we are doing is just allowing the markets to tell us where they're going. If they're changing, let them tell us that we are changing. And then we go in that particular direction. So now we know that ever since the markets came here, there was an uptrend. From here, there was an uptrend. It never broke. It's been an uptrend ever since here. There was never a time along this part the markets were breaking any support. You get it. It's been creating supports along its journey. So we continue. Let's continue further. From here onwards, let me just see how long has this been going. So I just make sure that we regulate it. But I want to make sure that all the keys, all the information are shared within this session. Market supported here, went all the way up till they resisted. We got the story of daily until current market price, meaning currently we're trading between here as well as this resistance. If it continues higher, we'll see it breaking above. If it is to change according to daily, only when it breaks here will it be a confirmation of a downtrend going to the downside. So now, when we are done understanding the story of daily, the next step is to switch time frames. From daily, we go to 4 hours. I hope we started it way back when you saw, guys, just to show you the power of following the markets until current market price. Let me just zoom it out first so you can see how it looks like ever since from the price we started analyzing it from. Let's just zoom it out. This is key support areas in its uptrend. Ever since it moved from this uptrend, this is the current existing support. And we've seen markets change into bearish moves, changing into uptrends, coming back. We saw from here, it's been in an uptrend, and then got here. There was a downtrend right here. After this downtrend, markets have been properly in an uptrend ever since it got to this price. So what do we do now? We are paying attention. Now that we understand what is daily telling us, we are going to 4-hour time frame. Now, here's the trick. When you switch between time frames, it is an opportunity for you to adjust your levels. The reason you see our work, our entries tending to be very lovely, very beautiful. You're like, hey, this guy catches nice entries. This company catches nice sniper entries. Opportunities where nice entries in the markets is because we ensure we try to get them at the best prices. And one of the ways of getting entries at key, beautiful prices is by making sure your levels are sitting properly. We do not just draw them randomly with no structure. They must be, we try to be as accurate as possible. Another thing is also for take profit situation. The issue is you find people are taking trades, enter the price, and then after entering the price saying, okay, we are buying towards a certain price level, for example. Let me just move this to the side. Say right now, you are saying you're going to be buying until some level. From here, you are buying until there. And then when the markets now turn before they hit your take profits, you don't understand why, you don't see the changes, you don't understand how did we get to that point. But the thing is, by setting your levels accurately and making sure they're sitting properly, you have the confidence that the markets are on a high chance will definitely hit your take profit if they are going in that particular direction. They won't turn along the way before they hit your levels. The reasons also as to why we do not undermine levels. So, with that being said, what do we see? This is us adjusting those levels just to sit more accurately. And also, one other thing that you should know, it's also a matter of fact that people need to know the type of traders they are. This is the levels we drew out on daily. But what I mean by understanding the type of trader that you are, we're speaking about aggressive traders, the type of trader. Do you have a high risk appetite? What type of trader you are? A high risk appetite, whereby now you take on heavy risk. And if you know that you're an aggressive trader, you need to be, one thing that you need to be is to be very accurate when it comes to your entries. You get it. You need to make sure that your entries are on point, whereby you can risk less and make the most. And the importance of these levels, guys, taking trades around these levels is it helps you and allows you to take minimal risk with the ability to take maximum reward. When the markets change, when you take them at the right key points, you will see the power of your risk management, whereby risk is minimal, but profitability is on a high. So now that we are on H4, I adjusted. This is the levels we saw on daily. This is the part we'll be paying attention to when the markets started their uptrend. Another thing you need to know about switching time frames is that when you switch time frames, it allows you the opportunity to see other levels that were not visible on a bigger time frame, which was daily. By so saying, what I mean is some levels we couldn't see. Look, this was the ones we drew out on daily. And then now we see there were other support levels, other resistances that the markets created, and we didn't see them because of the bigger time frame. Remember, on daily, each candlestick takes 24 hours to form. In 4 hours, they take 4 hours each to form. And meaning for 1 day, 1 day's worth of a candle is worth how many? 6 4-hour candles. Because it's 6 4 hours. There are 6 4 hours in 24 hours. So basically 6 times 4. What is it? 6, 12, 18, 24, making 24 hours. So 6 candles make up 24, make up a day of 4-hour candles. So now remember, okay, right here, okay, let me see. There was something I wanted to show you. Back here. Yes. Remember I said this is going to be tricky. Some of you are not going to see the pullback. There was a pullback. Let's look at this price on daily so I can just quickly remind you what I was talking about. Where's that support? this support. Where I said there's a support here, and where the markets pull back, we can see by the gap up, markets resisted pullback. People are like, for people to see actually, why do I say that? This is that price. Let me just go back to that price. Here it is. This is where it was. This is the price where the markets were. You can see there was a down move, went up. You can see that support that I indicated. You get it. So as I said, each time frame has its story. It tells us its story, right? We got to daily. Daily told us we're in an uptrend. We have a bearish day. Ever since we got to this price level, we've been in an uptrend. So let's consider markets from that price level where daily has been saying it is a support right here. What happened ever since that support? All the way going up. We're following it right now. Markets went up. There was a bearish candle right there. You see it. Markets went up, still failed to break it, creating our last support right about here. Markets, as long as they're trading above the supports, even if they leave a tail, the closing was above. So it means we still have an uptrend. We can see when the markets got here, there was a downtrend here. How do we know that there was a downtrend? Markets were in a downtrend, started creating an uptrend. There was a support here in this uptrend, got broken, meaning a downtrend, meaning we started looking for resistance, which was here. Markets went down, came back up, created a resistance right about here. And then what did the markets do? They chose to break to the upside. That's how we knew that we are looking to buy. And then what do we do from here? We know in an uptrend, we're looking for supports. Support right there. When up, came down, our last support. When up, just 1 second, just want to sit better. Ooh, this is exercise. It's quicker to do when you're used to it. It doesn't take this long. Just that we are explaining it. We want to make sure everyone understands. So support right here, markets went up, resisted right there, pull back down, supported there. The supports that we didn't see when we're on daily become clearer here. Sorry, what happened? Markets went up. We see a pullback here. Market supported here. Some right there. Markets went up. Didn't really break below this price. Still supported. Went all the way up. It has been bullish ever since. Creating another support. Our last support being here. Went up. Came back down. Before this support that we saw on daily, there was a support here. Where the markets went up, came down. Still failed to close. The market still failed to close. As you guys can see. They failed to close above. Below this price. That's failure, marking it still saying the markets are bullish. That's why we still see them go higher. Supported there. From there, what did it do? Went up, bearish candle supported. Markets, what did they do? Went up, came down, supported. There was a young small support. You can see when this candle with the long tail at the top, it failed to touch here, but there was a support. You mark that one. Doesn't mean you undermine it. You mark it because it is a new support. Markets failed to break. This was the last support right here. Markets pumped up. I want to show you something. Created a support. Once they went up, got that resisted on that resistance there. On this next day, there's a bearish candle supported here. What did the markets do from here? They pumped all the way up, got to there. I want to show you another thing, the similar thing that we saw on daily. What did the markets do when they got to this price? I want to show you something. When they got here, markets pulled down. The next day opened. I can guarantee you, if you go on the hour time frame, there's a support right here. That I can guarantee you. Let's see, what price is this on? 18949.6. 18949.6. Let's go see this price. 18949.6. This is the 1 hour time frame. Let's go see where it's sitting at the time. You see it. This is where we placed it. Can you see there was a support there? But we'll get to the hour. We'll get to the hour. We'll get to the hour. There's things you get to see, guys. We're still on 4 hours. We're still talking about this uptrend right here. You see there's a support right there. So there was a support. What did the markets do? They broke to the downside. When they closed and opened, when it closed, it gapped and closed to the downside, breaking, retesting. You'll see it on the hour. Showing that at this price level, markets started being bearish. Market resistance right there. Went down, created a resistance right here because of how you'll see it on the hour. Went down, target one. Remember, it's a downtrend, past supports, we can't take profit. This was the past support. Look how beautifully it just bounced off of that, creating a resistance here. This TP got hit. That TP got hit. After creating the resistance, where did it go to target those levels there? Do you see where they turn, how beautiful they turn at this price levels? How good it respects the price levels we always identify. What did it do when it got here? Supported, meaning this got hit. You can see here was a beautiful snapper entry for it to go to the upside. So did I delete the right one? Let me see. Yes. So right here, one thing I can tell you also here, there was a resistance. Why do I say so? Markets went down, went up, resisted. They closed here. Instead of here, there was a gap to the upside. The markets actually resisted when they closed here. They were supposed to go down. And then what happened? The markets broke to the upside. There was a change in direction here to that. And then now we know there's an uptrend. Then we know from here we're looking for supports. Market supported, they went all the way up towards, they resisted, came back down here, supported. Even if you do not identify this one, you didn't see it, you could have your last resistance as this one right here. And what does it say? When the markets went up, because it's a downtrend right here, came back down, supported. When they went up, they broke to the upside, tackling that past resistance. So we know here the markets are in an uptrend. And knowing that the markets are in an uptrend, what do we say? We start looking for levels of support. So we start hitting those ones that we were seeing there. And then what did we do? We started attending to them. Hit. Did we hit it? Didn't reach it. So we leave it. As long as it wasn't reached. But we know we have an uptrend here. So we're looking for supports. Went from here, came back down, supported there. Went up towards there, came back down, supported here. When it got to support there, went back up, came back, still never closed below the support, as you can see. So the markets are still in an uptrend. Even though they left the tail to attend to other levels, price again still bounced just to do a test of that price, still closed above the last support, which was this one. And what did it do? Continued, meaning the markets were still bullish. The fact that markets were closing above means the markets never changed direction. A lot of people were saying it's a break, it's going down because it's a retest, continue down. But what did it do? It actually chose the upside. This helps you to follow the markets like this, helps you not to be fooled by what the markets are doing. So it's all about the closes of the markets. And what happened here? So we still respected the support, creating this new support. Markets went back up towards the resistance, came back down, supported here, around somewhere around here. Supported right about there, I think, yeah. And then what did they do after they turned? They came supported from there. Remember, from here, what did they do? They shot up. They officially cleaned out this resistance. And then from there, we still know we are still in an uptrend. Let's just follow it. Let's be quick now since you're getting the gist of things. From there, we supported. From here, where did the markets go? Up till they came back, supported here. From here, they went up. Instead of continuing up, they broke out. Possible change in direction, downside. Resistances is what we look for. There's the resistance after it hit the support here. We went up till they broke the support. We are going down. We're looking for opportunities of resistances. Got to this price, went all the way up, resisted here. Came back down. There was a bearish candle here, a bullish candle. You can see here, even when it's supported, it showed that it's breaking out. But we knew that since our last resistance is active, we're still looking to the downside. As long as the markets, when they went up and resisted there, they came down towards here. And then ever since then, we know that the markets never broke the last resistance, still respected it. It means we're still looking for opportunities there. And then even breaking below, showing us that we are going lower. Did we hit the last support? Even if you were to build this upward trend here, you would have seen it here. But there is no uptrend because resistance was not broken. The last resistance being there was not broken. You can see here it supported, went back up, resisted, broke, but this was the target actually of the resistance ever since broke and creating the new resistance right here that hit this take profit target. So you see that, guys. What happened after this? What happened after this is the markets hit that target there. When we break one, we look to the next. The next one was down there. So we look, as it goes down, what are we doing? We are looking for levels of resistances. So that when it changes direction, we know that the markets are no longer going down, but they're going up. Went down towards here, resisted there. From here, what happened? Went down towards here, supported, went and broke resistance. So there was a young uptrend for me since it got here. Breaking it, past resistance becomes take profit. This one got hit. Got to there. So we know there's an uptrend that is forming here, so we look for supports. Markets move from here to go there. Support was here. Instead of it continuing higher, what did it choose? To break support. Past supports become take profit. This one got hit when it broke. So meaning here there was a downtrend, so we'd be marking resistances. Ever since it came here, there was a downtrend right here. Went and cleared out this price. And then from here, instead of it going to the next level, it went back up, creating, we know that there's a downtrend here. So we're looking for resistances. So it went down, went up, went down. Instead of hitting it, creating a new resistance right about here. Instead of it going all the way down from there, it chose to break above this resistances. And a break above resistances plus resistance take profit target. So now we know there's an uptrend now, right here. So it broke it, got hit. When it went all the way up, it hit this one. Where did it choose to turn at one of our resistances here? We know there's an uptrend, went up there, came back down, supported, and then we can see there's power. Even when it decides to turn, it respects these levels. Got hit that one, got created. We know we're in an uptrend, right? So we know this part, okay, sorry about that. We know that this part of the markets are in an uptrend. So we're looking for levels of support. When up, came down, supported. After it supported, this was the time when it broke the indication of the breakup to the downside. It even hit it, so this one was out either way. And then from here, from the support, it went to address those big twos at the top. Did we hit it? We hit it. Did we hit this one? We hit it. So what is happening currently? We know that markets are in an uptrend, current market prices. We see our support right there. And then what does it say from here? We see the markets have been bullish, got to this resistance. Right now, this is where we are at. We can see the pullback. So according to 4 hours, 4 hours says we are in an uptrend. Now the story of 4 hours. 4 hours says we are in an uptrend current market price. Same thing as daily said, but we have a pullback that is currently happening. But as long as we are trading above the last support it created, the markets are still going up. Only when it breaks, then we know that we are sinking. The trend has changed. But right now, what do we see? We see the support as our last support. That's the resistance. So markets are playing here. This pullback can be just retesting tomorrow. You find that the markets buy even stronger because we are still in an uptrend according to 4 hours. And now look at the price at which 4 hours says if we are to break this last support, we are going down. Look at the price. The price is 19,390. Let's go on daily. I want to show you something. Going on daily. Daily's last support was here. Remember, we added other supports. That's why you see them increasing when we go on a bigger time frame, because we saw them on a smaller time frame. Daily said this was our last support when the bearish candle right here. This was 19,141, which was lower. But according to H4, it means now you can see that if it was to be, we know that we're going down. But daily, you had to wait. That's why I say when you go through time frames, you get to see the changes earlier. So let's go back to 4 hours. So according to 4 hours, this is our last support. We break it, we know we're going down. But before that, we all know that we are still in an uptrend until further notice. So the story of daily and H4, they're not much different. They all saying we are in an uptrend. And until the key support levels that have been identified are still holding, we know that until then, we look to the upside, meaning buys are still possible. Right now, even though buys are still possible, but we know we are pulling back. We saw it on daily. We also see the pullback on H4. The question is this pullback all the way to break, or is this pullback just a test for continuation to the upside? That's what we're going to see. Or as I say, we are painting a picture right now. We are trying to get a full view of the markets. We already know the views of the markets, of two markets, without trend lines, without messing up a lot of things. We could speak about a double bottom, a break, a retest. We just simplified it by just following the markets right now, without complicating things, because there's power in following the direction of the markets. We do not trade what we think the markets are going to do, but we trade what the markets tell us. Thing is, we tend to try and expect and say, this is what the market should do. And it shouldn't be like that. When we trade what the markets tell us. Let the markets tell you where they are going. If they've broken out and changing directions, they will tell you. It is not for you to determine, but for the markets to tell you. Follow the big money. That's the story. So according to H4, same story. So last support is here. Uptrend, we have a pullback. Once we break the support, we know that the markets are now in a downward direction, meaning the big moves will be in the direction of the downside. You can see in an upward trend, there are pullbacks, but the strong moves are the big in an uptrend. In a downtrend, even though there are pullbacks, here you can see is a beautiful downtrend, even when there were pullbacks, but the best trades were to the downside. So in this case, right now, we have an uptrend. The best trades, meaning they are to the upside. We can see markets did pull back, but the strongest pay moves were to the upside. Here's another good move. Right now we have a pullback, yet hasn't confirmed the downside. We have to go and trade in the direction of the markets. So far we have an upward trend, and that's the story of H4 with a pullback that is happening. Until it breaks this price level, the last support, we just consider it as a pullback. We change time frames now. Now we are on the hour. The hour time frame. The same story as I told you on H4. When you switch time frames, make sure your levels are sitting right. They dictate your accuracy, your positions, your targets, your entry are sitting in a critical quality position because they dictate quite a lot. We don't need to go as far as back, but yeah, if you want to, you can go. I know by there, they won't just shoot down unless there's a global crisis where you just see all the way this long, a long candle like this, without giving people a chance. They would halt the markets. I can see possibilities. I'm sure people are like, hey, trend line, can see, draw a trend line. I don't draw such trend lines anymore, but I know a lot of people have this trend line at play. And you can see where's it going. You can see, possibly can come here, create a third touch. But yeah, for now, let's leave the trend line matters. So let's leave it. Let's stick to what we are here for, following the markets in its simplest and raw form with the Euro Wealth way. As we said, levels, when you switch time frames, ensure your levels are more accurate. Another thing that we see when we switch time frames is new levels that we couldn't see on a different time frame, on a higher time frame. So in this case, we see our support right here. We know that this pot markets have been an uptrend, and then let's just follow it within this pot so we can get to the end. You can see markets went up, came down, supported here, went up, came down, supported, went up, still respecting the support, that pot here, and then from there we went up, came down. This is a new support it created that was never addressed in the past, and then we went up. We can see when it got here, there was a young support right there in this uptrend, and then went from here, you can see there's a young, very bullish candle right there. There was a support here indicating a possible change in direction to the downside. We break it, we go to the next past support as a target. If there's one thing you've seen, normally our first targets, on average, they get hit often, very strongly so. And I'll tell you how to deal with that. And you see, when we target this price, it's good targets, good pricing. And when it broke below this one, we knew the markets are going down. The target, this one got hit, meaning when it got hit, we know from here the markets are in a downtrend, so we look for levels of resistances. So meaning the markets got there resisted, went down towards the support, went up, we know it got here resisted all the way from there, went to hit our target, went all the way down towards here. So there was a downtrend right here. Got to this support, went back up, created a resistance, went back down towards this support. I want to show you when it changes. When it changes, where does it change? Went back up towards the resistance, came back down here, supported. It went down, went up, creating another resistance right here. Went back down. You can see there's a gap up. The markets broke above, targeting the past support. When it broke this one, this was the nearest. Small pips, but it's valid that it did that, so it's cool. Hit that one. There was a change in direction, meaning here there's an uptrend. So meaning we look for supports. We went from up there, came down here. Went up there, kept up here, bearish candle. There was a support here, right about here where there's the bullish candle. Went up, broke, meaning there's a downtrend here. So meaning we look for resistances. From here, markets went down, went to hit that target, the first target, which was here. They hit this price, so meaning this one is gone. And then what happened from there? This level was marked on a bigger time frame, but we know there's a downtrend, came back down, supported here. This was the resistance. Since we know that since we broke this one, there's a downtrend, resistance here. Instead of markets continuing lower, they chose to break to the upside, meaning uptrend from here onwards. Uptrend from here onwards, what does it mean? We look for supports. Markets went up, came to support there. This target got hit. This target got hit. This target got hit in the uptrend. Where is it? Got hit. Got hit. So we know we're looking for an uptrend. Got to this point, supported. Went all the way up, came back down, still respected support, last support. I just want to rush now, being this one. All the way down towards here, supported. Went up, came down, supported. From here onwards, markets went up, came down, supported. This was identified on a bigger time frame. From up here, they went up, came down, supported. From here, went up, came down, supported. From here, went up, came down, supported. From here, went all the way up, there's a bearish candle, supported. What happened from the markets? Went up, came down, supported. Went up, came down, still respected support. Went up, broke out. We sold here. If you were to see our previous signal, when we said it's going down, we sold right there. We sold right here. This is where we sold the Germans. And it did very well. So what happens from here onwards? The markets have been, one thing we saw when we sold is the head and shoulders that is at play here. And we saw it coming based on smaller time frames and going into detail. But besides that, let's just keep the follow the markets. Ever since we supported here, we went up, we still respected this support, creating a new support right here. From here, the markets went up, came back down, supported right here. They never broke to the downside, meaning that the markets currently are in a downtrend. Thus, we start looking for levels of resistances. Only when we start breaking resistances do we say that the markets are going to the opposite direction. They are changing direction. So here was our last resistance again here, went down towards there, came and kicked this price level out. So currently, now we're getting to see the details. Markets actually, the downtrend was actually expressed beforehand. What we see the pullback, remember what daily and H4 said. We are in an uptrend. Markets, they had a price level on daily, but on H4 it was higher. Where we're going to see the market saying they're going to go down. But when we got to the hour, the breakout actually happened right here. And what happened? Markets have been supporting. When up came down, this was the last support right here. Markets went up, broke that support. Instead of the markets continuing higher, they broke the support down towards here. Only we know now that it's in a downtrend, we look for resistances. From here, this was the resistance, went down supported, resistance, went down supported. There's a bullish candle. You can see it's a break and retest. And then of this break. Now, as long as this resistance holds, the markets are bearish. Only when the markets break above this resistance, I'm sure, guys, you can see a W kind of structure. If it is respected, it will only be a break, a retest, then you can buy towards this price. It breaks this, you look towards that, breaks that, you trade it as it goes. But as long as resistance still holds, we look to the downside. So what are we looking for? Markets right now could be just pulling back, and then next candle continues and goes to hit that price. So the only time you only buy when the markets break above here. So for as long as the markets are trading below here, we are not considering any buy opportunities because we need to break the last resistance for us to be comfortable that the markets are going up. So if you didn't sell at the retest, wait to see if the markets, you only buy only when it breaks this price level. That's the only time you buy. Otherwise, in some situations, you've seen the markets do double tests of a certain price. For example, when the market supported here, the markets went all the way up, came and bounced again and went higher. In this case, leaving this as our last support. What are the chances it can come here, when go back down, and then go up, test this, and then sink again? That's why you need the confirmation of a breakout for us to be more comfortable. So what is 1 hour telling us? Now we're getting the story. The hour says we are still bearish. As long as this resistance holds, we are still looking towards it going to that price. That's what the hour is telling us. Only when the markets break above this price will we wait maybe for a break, conservative break, retest buy towards there, and then we break that one. We know that we look higher only when we break it. But because the reason why we have to wait, because it can come here, resist, and then again drop, possibly. You get it. So for now, what we are working on before we have this break and retest, what we are looking and working on is a downtrend, whereby H4 told us we are going to see the downtrend when it breaks that support on 19,390. H4 was actually saying when we break this price, we are going down. But you see on the hour, we even saw it earlier, the downtrend. That's why if you were to see our signal, we caught it right about here. We saw it earlier, and then we sold it. So if it is valid, this pullback goes all the way, breaks even H4, we know that we'll be even making more money as we trail it lower. This is a lot of pips. This is a lot of points. This is a lot of money that you can make by just following the markets. We haven't added trend lines. We haven't even done anything. All we're just doing is following the market. And then we know when we set our stop loss just above, right now that we're trailing, it's already locked. What do we do? So now I want to give you one key point of managing risk. Let me show you something a little bit lower. We also go to 30 minutes. How did we get our signal? That's the question. How did we know to sell? We go all the way to 30 minutes also. We can see other levels that were clear. I'm not going to identify them. We can see it went down, went up. There was that support where it was hitting a lot of the head and shoulders. We got to this one. Markets went up, came down, went up, came down. Where's that? Okay, went up, came down, went up, came down, broke out here. That was our confidence, or that the markets are going down, because they went up, came down. Instead of continuing high and breaking resistance, they broke to the downside. We knew that it's going down. When we sold, we were here. We were here. So another thing we can speak of impulse and correction. If you pay attention to other courses, we make other things clearer. Impulse and correctional areas. There were some other indicators to tell us that definitely the markets were breaking out, that definitely the markets were going higher. I'm just going to draw it randomly, but we can see here an impulsive move, a correctional area, a breakout, retest, a sell. It was obvious why we sold and we caught the sell. But for now, we can see also on M50, M30 time frame, 30-minute time frame, a breakout caught it high. You could have caught it alongside when it came back down here, sold it, stop loss just above, and then how would your risk and reward be? Let's see. For risk reward, if you're selling, in this case, say you sold upon breakout. So in this case, the markets broke out, pull back. Actually, markets here, they dropped. This is the support here. Because when they dropped, they came and supported here. Then they came all the way down. Then down, went up, then down. Okay, let me just keep it here. Make it easier for people. Let's go on the hour. Let me see how the support looks like. On the hour, the last support was here. When you go on the lower time frame, you see the support is earlier. Yeah, when up, came down, supported here. You see it. When up, came down, supported, went up, and then the breakout actually happened. So you sell on retest or at the breakout, selling at the breakout point. You see, that's the support. Selling at the break, once it breaks out without waiting for a retest is a bit of a risk, but yeah, it's also good. Sometimes markets don't retest. They say no risk, no reward. So you set, after it confirms breakout, you set your trade. This is how it will look like. Basically, you'll be selling at the retest. And then let's just see on M15 real quick. Where was the last resistance there? Markets went down, went up. This was the last resistance right here. So stop loss. Let me just set the stop loss just above. Let's go back to M30 because I'm looking at it on an M30 spectrum. And then selling it down towards there because that's where it's going. It breaks this one. We look to the next trend. Direction changes. But I'm going to give you another key point. One of the secrets of this matter. So your trade on the hour would look like this if you took it here upon retest. Break this tail when it pulled back up was a retest. I shared it with our signal clients since we were in. I added positions when it came to retest. So it retested and then came back down. Retest, you see, this was the breakout point where it retested. It was a support, then retest, break, retest, and then sell. So currently, the markets, you sold here. Now, went up, down, went up, resisted. Actually, that retest point is a resistance. We saw it on M30, right there. I'm going to give you a key point just now. I'm going to give you a key point. You can see the resistance here. Where is it? I'm just trying to get a hold of this. Yeah, there it is. You see it, the resistance there. So I set it with a magnet, so it's sitting exactly on top of it. That's why I keep using my magnet. So we see the retest right there. You sold. It's beautiful entry. Pull back, went back up, resisted. This is our last resistance. So far, you're running within profits. You can see the risk to reward from here to there. That's your stop loss, the number of pips. And then, but you take profit all the way towards this target. We break it, we see it at this target. Other targets in its, after it broke out, when the direction changed, there were supports here that the markets cleared out already in its uptrend. This supports right here. This got hit when it went down, definitely. This was also going to be a target, got hit. This is a target, it got hit. So right now, we are in a downtrend. Those that are hit, now we have this one that's not hit. Only when we break to the upside, then we start looking. So for now, our journey of this trade is if for those that sold there, this is your target. So if it breaks to the, only if it breaks to the upside, breaking the resistance, you wait for a break, a retest, then buy. But for now, how do we manage such a risk? Okay, this is how we manage risk. This is the last lesson right now on this aspect. We had those supports, right, before they got taken out in its uptrend. I just want to set them again. We retested. We can see this area was a nice support break retest. You can see this area. It was very beautiful right here to sell at as a neckline type of situation. We see this price, right? When the markets broke below, when the markets reach your first take profit, When the markets reached, you could have seen it higher. I'm just giving you for those that could have caught it here, but there are entries that you could have seen higher if you were to look on M30. So in this case of people say who sold here, when the markets break your support, when they reach your first take profit targets, that's when you adjust your stop loss to entry. Let me move it here. Meaning stop loss, you adjust it closer to entry, just above entry, you will minimize risk, or all the way down to break even. So, and what do you do once you reach break even? You secure, so once you reach your first take profit, in this case, was minimal. Let's say to this one. When the markets reach this price, but let's keep it simple. Normally, when the markets reach your first take profit targets, you secure some of your positions. This is the reason why we open multiple positions. You'll find that it's like, why is this person opening 10 0.1s instead of one lot size? It is because to manage risk, to maximize on reward, right? So say when the markets reach here, you lock your trade after you close some of those positions, not all of them, you leave the remainder to run risk-free. That's why you see on all our posts, we say secure some profits, leave the remainder to run risk-free. Those remainders are to trail them towards other take profit targets. Even if the markets now say they broke in here and then they decided just to buy a spike up, you know you're walking out with what you made when you close those that you secured, or you're making even much more money with those that are remaining. So you are now no longer in a risk trade, but you are now in a risk-free trade, meaning when the markets went all the way up, resisted here, came back and resisted when they went down, you are still fine. So we have trades running. We got here. I would have waited. We waited here. We secured some of our positions here. When the markets dropped all the way from there to here, we secured some of our positions here. It went up, it broke it. When it broke the support, we targeted this level. When this was the last support, and then there was also a support here that is not visible to the eye. I think I explained the support right here. Let me remove this zone so I can show you. There was a support here for where the break and retest happened. It went to test the support. It went down. Let me remove this because it got hit. When the markets went up, they came down here first, supported, went back up. They went here, supported first, went back up. This was the indication of the breakout. This is where you sold upon retest. When you sold upon retest, and then what happens? Now that you lock them in, we can see that the markets now, they are in a downtrend. We targeted, when we break, we broke this one. The target will be the last support, which was this. So when we got here, we started locking. When we got here, we closed some of our positions, left the remainder to run risk-free. So we maximized one position leading to about 1,000 or 1,005 on a standard account. So when it got here, markets pulled back, went to retest. We were still locked in. We were not out. We did not panic. I told them, do not panic when the markets pulled back. As long as they didn't break the last resistance, created the resistance right here. When it retested to pull back, came back down. This one was when it got hit. It's gone. Pull back down, supported, went up, created the last resistance. Currently, according to the hours, this one. Markets went back down. It's at night, so markets tend to be slow. They can create another resistance. This is good during nice New York session times or just before New York session. After a while, you apply it, you catch nice moves, guys. At night, markets tend to be slow. It's at the end of the day. This is another session right now, but it's cool. So markets went back up, came back down. Currently, we are playing at this price. Currently, markets are closed for the day. This German 40 closes earlier than your Nasdaq's. So currently, you can see but how it looks like. So we have our support there that got hit. So currently, what are we looking at? As long as this resistance, this one, we look to the next. Breaks that one, we look to the next. Breaks that one, we look to the next. So for as long as the resistances holds, we are looking to the downside. Only when we break resistances will we be looking to the upside to clear out other past resistances. So this is just the spirit of following the markets. You can see the power, the levels, the targets getting hit often. This avoids situations whereby now you are trading and your targets aren't reached. Your targets aren't getting hit. How do you manage your risk? You can see when we move towards a target, we start locking, we start protecting. You can see the risk to reward ratio. We minimize risk, we maximize on reward. Type of entries with this, you can see where the retests are happening at key points. That's where you look towards taking trades at the key points, and then taking them at those key points. You see profitability, minimal risk, maximum reward type of trades. And I know that this, you guys if you understood every step of this, it is powerful to apply with any strategy you have just by following the markets. Let me have a sip. I hope this information is powerful. And guys, I want to just go also a little bit deeper, just a little bit deeper. Other things, guys, you better be part of the Uriel Wealth family today. There's deeper secrets than this ones that will help you with your consistency and profitability. You just have to contact us, reach out to Uriel Wealth, Uriel Wealth Group. That's our company. Reach out to us. You'll see the power of what we speak about. So, guys, here's another thing. We were speaking earlier on when we started the session that there's power in psychology, right? There's power in the psychology of things. When I said 10 to 20% is skill and strategy, that's all that contributes to your consistency and profitability. Psychology counts the most. The issue that most people lose is failure of addressing basic trading aspects. Like right now, someone sees the retest when it's happening, but because of psychological aspects, they fail to take the trades, overthinking trades. We know things that are hardly talked about that actually make people profitable and consistent. It is not just a matter of your common ones, which is your fear, greed, FOMO, which are common to most people. Guys, when I speak to my clients, we tell you that psychology, that each chart is a representation of your character. How you take trades says a lot about your character. How you analyze, we see your character in your charts. We always say life lessons apply to trading as much as trading lessons apply to life. And now, what do I mean by that? This is the keys. This is the principles of trading. What is powerful about trading, the psychology of things. You don't pay attention to it, you'll forever be a professional donator to the markets. Let's give you a practical example. You can't say, as a person, you are impatient, right? Patient at your work, you're impatient in the things that you do. How do you expect to be patient to wait for the markets to retest before you enter? All of a sudden, out of a miracle, you are patient. Out of a miracle on the charts, you are very, very patient man. Patience is a skill that can also be learned. So we cultivate certain habits, certain disciplines, certain principles that actually lead to you being able to create a life and of consistency and profitability when it comes to trading. You can go to any successful trader or mentor that is genuine and legit. They will tell you the power of psychology. Some of you, maybe they don't talk about it, but they will tell you that mindset plays a huge role in your profitability and consistency. It doesn't mean skill is less important. You still need to know how to analyze, know how to follow the markets as we do, and you know how to treat trading without emotions, without worry. And then you see consistency and profitability. This doesn't mean you won't see losses, but your losses will be minimal compared to the profitability aspect that you have. Some people, the issue is not just the psychology of things. Even your strategies are a mess. Some of you, your strategies suck. We have to be real and frank with this aspect. Some of you overanalyze. You're applying 10,000 things on your charts. You don't even get to understand. You over-confuse yourself. You overanalyze now. Things are just a mess. You're just seeing buys and sells at the same time, overcomplicating things. You need to learn a better strategy. And that's what we are here for, to teach you. So come and learn the power of these things. When you see us posting, we don't post things randomly, but we post things with the knowledge of things. I always tell people that, as I said, charts are a representation of your character. Patience is a skill that needs to be cultivated as a trader to be able to say, I'm not taking any trades until the markets do certain things. That's why we say, plan your trade and trade your plan. So if the plan saying this is where we're going to be looking for opportunities to sell based on how price behaves around that area, and then that's the only thing. If it's not there, rather the markets leave you. Some of you trade out of FOMO even now that you, because of fear, you even trade out of FOMO, whereby now you over analyzing a chart. Yes, you see the opportunity, but you overthink things, and then you tend to take trades premature late in the markets because they already left your station. We always say when the train has left the station, wait for the next one. We don't chase the train down. You wait for the next one. Your character, your discipline, your behavior is seen by what and how you respond to the situations in the markets. Thing is with trading, disciplines and risk management, they work hand in hand. You know that if you take trades at the right time, at the right place, it allows you to minimize risk, whereby you find someone now wanting to sell here. Sorry, not that too. Someone saying, I want to sell now. Are we selling now? And then now stop loss right like that. Here's your take profit. This is ridiculous. We want trades where risk is managed, where risk is minimal. And then it's about maximizing on profits. There's someone who was saying, people are good at holding on to losses with hopes that losses will do them good, will change and come into their favor, but they are quick to close their profits. Whereas this situation needs to be vice versa. It is emotional, it is psychological, where people now they have hopes that their losses will turn in their favor, but when they're in profits, they panic saying, yo, what if it turns against me, closing small profits, whereas they could have maximized on the whole entire move by trailing it and locking and securing along the way. Whereas it must be vice versa. You need to maximize and hold your profits and maximize on your profits while you have minimal loss. That's the type of trades you take. But everything rotates around the psychology aspect of things. There's deeper aspects that we always speak about that you need to be part of our family to get to unlock the secrets of consistent profitability in trading. That's the reality of things. The thing is, you can go and learn every strategy, watch every YouTube video, and I can guarantee you, until your discipline, your psychology is on point, you will forever donate to this market to a point where you say it's not for me, or you even call it a scam. So there are certain things you need to outlearn, certain things you need to start applying. This is your character expressed, and now character can be amended. Habits can be amended by learning new ones. Habits, you replace them with new habits so that they do not affect you. As we say, I always say trading lessons apply to life as much as life lessons apply to trading. What does that mean? Guys, this is investments that we are dealing with here, money investments. And one thing about investments, it requires certain principles and disciplines that no matter what you invest in, no matter which market you go into, certain things that you need to respect within those markets for you to become profitable or to become a big fish. Another thing about people is fear of taking upon risk. Risk is one of the aspects that you get in investment. No risk, no reward. Every opportunity requires risk. But now when you take good trades, as we always do, you have minimal risk to worry about, but maximum reward. But now with risk, people get scared. They fear to take opportunities. You need to see an opportunity when it's there. Stop overthinking, stop overanalyzing. Seize it, take the trade. As long as it meets the requirements and the plan, and you said it's going to sell here, take the trades and then see later. And I always say in every win and every loss, there's a lesson. Another thing people can't do, they're always blaming market makers. They're always blaming when the markets turn against them. They're blaming market makers. They're blaming manipulations, brokers, whereas now they can't take responsibility for their losses. That's another thing one person needs to do. You need to learn to take responsibility of your trading losses, because once you take responsibility of your losses and your profits, now you get to learn from those losses and profits. Go and tell yourself, okay, I've lost, so what is the reason I've lost this trade? So that you learn from those lessons, so that even in future you can do the right thing, you can apply the right principle. Another thing we speak about is confidence. Confidence, that's the way you're scared. People tend to depend on what are other people saying. You don't have confidence in your work. Some of you are great analysts, but because you lack confidence, you're now at the mercy of the public. With the public on the other hand, where the majority are losing money. You are in groups, you're always looking for free groups, looking for opportunities. What are other people saying? Sorry. What are other people saying about this analysis? Say, for example, you see an opportunity to buy gold now. Now you want to go on groups, what are other people? And then if everyone is saying they are selling, now you think you are wrong. I always tell people, I will never change my opinion on a market unless you give me feasible and understandable factual information as to why you're saying the markets will go the opposite direction. Rather, I hit stop loss, I learn from my mistake. But at this point, you need to be confident and trust in your work. Some of you, you don't, the day I learned to be profitable was the day I started trusting my work because I knew that I can analyze. I knew I can see the markets. And then, since I trusted my work and not allowing everyone else to dictate what my trades are doing, that's when I started seeing profitability. The only time anyone can disagree with me or I'll accept correction is if they give me facts. Otherwise, I'm not wrong. Then let's all trade what we see. Because at the end of the day, if you can't trust your work, you don't know, basically, you're not confident in what you're doing. And that's something, it's a lesson that is built through time and practice and understanding. When you learn these things, they cultivate that confidence. And once you have that confidence, you go in and you take those trades. When you see the opportunities, you don't overthink it, you place the trade, and then we see from there. But that also requires that 10 and 20%, which is skill. Your skill, which counts the most. Once you cultivate your skill, you won't worry about much. You also need a proper strategy. As I said, some people, your strategy is the reason why you're losing. Some of you are basically could be disciplined, but what you're trading, your analysis, your strategy is problems. It's nonsense. Not everything you find online is key. Not all things that you see on videos will work for you. Even if they're working for someone else, doesn't mean it's for you. It's not that I don't know a lot of strategies. I can tell you about SMCs. I can tell you about all this type of strategies that we see out there. I've watched, I've learned a bit about them, but some things are just not for me. And then I take what works, I leave out the rest. And then that's where we build confidence and consistency and profitability. There's deeper aspects. I always say when I end my sessions live, there's power in three things. There's power in knowledge, there's power in understanding, and there's power in wisdom. As I said, life lessons apply to trading as trading lessons apply to life. Until you learn these principles, guys, until you pay attention, no matter how boring they are, but they are very and most important things that you need to learn and apply. It's not just about speaking things, but actually applying. So what do I mean? The top three things that we value here at Julia Wealth Group: knowledge, understanding, and wisdom. Knowledge is information, meaning whatever that we're telling you right now is information. Information, which is knowledge. Knowledge alone is pretty much useless. You can have all the knowledge of anything in the world, even trading, or even outside of trading, but alone is useless. Knowledge is information. Information doesn't benefit you without the other aspects. The second one is understanding, which is comprehension. Understanding how to apply the knowledge, the information you've attained. It's critical to know how to use it to your advantage. And then now you have information, you have understanding on how to do it. They still remain useless if not for this last aspect. Once you have knowledge and information and understanding on how to apply it, you need to apply. Action aspect. The actional aspect of things yields what? The result yields experience and value, which leads to the last thing, which is wisdom, which is the result of applying the knowledge you have alongside and knowing how to understanding how to apply that knowledge and putting in the work. It's information, acquiring the information, understanding how to apply it, put it into action. You yield value, which yields what? Results, which yields value, experience, which is wisdom. And how does that work? Also in the trading forefront, meaning whatever that we've said, if you are just not going to apply what we said, if you're not going to get this information, understand how to use this information to your advantage and apply it, then pretty much useless. You get it? So we need to learn to put things into action. When we say we're going to do things, stop procrastinating, stop putting things to the side, because that's one of the biggest things people tend to do, give excuses. And now when you give excuses, even in your trades, you'll give excuses why certain trades won't work. You wonder why people don't see profitability? That aspect right there that I just expressed. People give excuse something, but when it's time to do something, we don't, because of all these reasons, all this procrastination. Once you build an action-based mind, you start, even in your trading, you start seeing you taking action in your trades, becoming profitable. And through practice and not and application, you become great mentors. You know you can never go wrong. A life can be built. We always say we don't sell a get rich quick scheme, but you can get rich quick in the trading industry. But don't come with that mindset. It's all about creating extra cash flow, capital. When you use trading spectrum, you invest in other things that will yield more money with the profits that you make. When I speak of psychology and mindset of a trader and the disciplines, these things go up and beyond the usual. These things go up and beyond just what's this? They go up and beyond just what I've said. Even your financial management. What do you do with your profits? What do you do with your withdrawals? How do you manage your finances? It's another lesson on its own on trading to build a consistent, profitable trader. These things are learnable. These things are skills that can be yielded, that will yield, where you see people yielding great results, great money. And all of these things, they are acquired by application of the things. When we say act, when you're given the opportunity to act, you take it on. When an opportunity avails itself, you take it on. Thing is, one thing, guys, here, we do not chase money here at Juria Wealth Group. We do not chase money. Money, guys, is not running away. The wealthy understand that. Money is there. We understand that wealth is created through through distribution of value, through sharing information, knowledge, ideas. That's where money is. Money is there, guys. Money has already been made. We don't chase it. It's not running. We go after value because that's what you're paid for. We always tell people that you're not paid for the time you spend at your job. You're paid for your value. That's why we have a chartered accountant. You can have an HR head, and then an HR head and a chartered accountant working the same hours, 9 to 5. But at the end of the month, they are paid different amounts because of what the markets value their profession. And when you build upon your value, you associate with organizations that actually have value, that will grow you, that will inspire you, that will build you, then one thing that is for certain that you will see is money. Money comes as a byproduct, as a result of acquiring value. To get more money, you acquire more value. Association, being part of organization. And another thing, guys, you can't save yourself to wealth. When you want to see profitability, wealth is a result of giving. The key to wealth and riches is to give. Every business has to give something. Capital needs to be invested into that business. Knowledge has to be invested. You need to put down your capital, which can be monetary or whatever, time. You need to give in order to receive. That's the principle of life. People in this day and age, they want to just see results first before they actually invest in things. They want to see fruits before planting the tree. That's the problem that most people have. That's why they never take action. Because if they don't see the fruit, if they don't taste the fruit, they will never take the action. Whereas to get the fruits, you need to put in the work of planting and budding and watering and growing that tree. So if you want to be a trader, you cannot be someone who's stingy with money. You must invest. When you see an opportunity to grow, mentors to be around, pay if you have to, because you know your money will come back. It's an investment. It's called an investment, not an expense, for a reason, because what you put in can yield results, and wealth is created by giving. So when you see an opportunity to be part of organizations, to build and grow your value, seize them, whatever industry you move in. That's the truth of the matter. That's where money flows. That's the principles of life. Once you cultivate those principles, you see profitability. You see it in all aspects of your life, not just trading. The moment you take action, if you do not have the finances at the moment, go get them ASAP. Make sure that opportunity, make it a priority. Make sure you're a part. If there's certain things you can do at the moment to make sure you make it happen, money will never come to those that try and block it and hide it. It's important to save for rainy days, but when you speak of in wealth and riches, that requires you to build on value, building on money, and investing money, allow your money to start working for you. Some of you are working for money day in, day out. You are working for money. That's nothing wrong. once you've been given the opportunity and the blessing to work for money, and then you get your money, what you should be doing is taking that money, reinvesting it to create to a situation where money starts working for you. It all starts with a decision that you take now. After hearing the sound of my voice, make decisions that are going to benefit you in the long run. All of these things apply in trading. Value, acquire the value, principles, disciplines, trading plans. Some of you don't even have a trading plan. You don't even know how to plan, how to strategize your withdrawals. Every cent you take, you blow it. Next thing, you don't even have money to fund. You have to wait for your next payday, your next allowance. There is no discipline in that. And then you expect to be successful trader, to be a successful trader. And you are wishing on stones and things that don't exist, on fairy tales. So we need to apply the key principles. We're unlocking. This is just the beginning. And I pray this session blesses you guys and understand it goes deeper here at Junior Wealth Group. We do not just speak about just analysis. We break down the things that will show you wealth. We are where we are. The money we've created, the opportunities, guys, I can tell you, I've been in the game for 9 years. I've made money. I've lost money to a point where I had nothing. And from there, I even recovered. Like, guys, I've been through the ups and downs to tell you the journey of trading. That's why we are mentors. There are things that we know, certain aspects, certain secrets. Join us, be part of our community. And guys, invest. Trust me, we are not free. This is where we see the real people who take on the situation. Our services aren't free. People value what they've paid for. And I know where you put your money, you'll make sure that you achieve. So let's make things happen. Let's grow the Uriah Wealth way. Thank you for your time. I hope this session blesses you. And then let's go deeper. Be part of our community. Contact us now. Contact us now. For those that want to reach us, just need our WhatsApp numbers. I'm going to leave them here. This is a video, so whenever you want to reach out, sorry about that. Just want to type it out right here. This is for WhatsApp. You WhatsApp this number. South African code is +27. Put this in your phone. 622157352. That's the code. This is the number. Enter this in your phone, save it, send a WhatsApp to this number, or find us on all our social media platforms, and then contact us, reach out. And I pray these things, guys, help you. Follow the markets. Let the markets do the most for you. Thank you once again. This is the founder and the CEO of your Wealth Group. We can't wait to have you as part of our family. Let's make things happen. Let's make money. All is good. Have a good period ahead. Let's hear from you. Tell us what you think about this session. If it was good, if this thing works for you, how your experiences are going. But we pray that this helps you quite a lot. But yeah, another time. Till another time, let's go chat. Contact us on WhatsApp. Tell us that you found this video. Discounts for everyone who contacts us because of this video. We'll get a beautiful discount to be part of the family and make the most. Let's make money. Let's create riches. Let's create wealth. We are here for that. We are not here to play, but guys, we're here to yield profitability and consistency. All is well. We are going big and we're going to do the most. Power to everyone who's here.